how would you like to achieve your first million? And today we have Chris with us, which is the president and CEO of Community Bankshares. It's a holding company, Community Bank, and Trust CBT, Phoenix Lender Services, and Thomas Financial Group. They finance the nation's small and underserved businesses through our SBA 7A and USDA. So before he was a founder and CEO of Fontaine Hay and have more than 24 years experience of leadership experience in the commercial lending industry, specifically with SBA loan programs. So Chris, tell us, what are the 5 steps that you recommend entrepreneurs in order to achieve the first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
I think for an entrepreneur starting out to achieve the first million, I think what the first thing they need to do is find a niche. So, and you find that by doing some due diligence, doing some research to determine what it is that you want to do. It's not easy. It probably somewhat is going to be related to some of your interests. I would say, you've got to have, that would be the first thing. The second thing is you've got to have some sort of purpose behind it. I don't want to say that you need to be passionate about it, because I think if you have a purpose behind why you pick that niche, I think in time you can become passionate about it, and hopefully you would, because passion and purpose sustain you through the entrepreneurial valleys, because there's ups and there's downs in entrepreneurialism. The third thing I would say is you've got to figure out, how do you differentiate yourself from your competitors in that particular niche? That is something that I think a lot of people don't spend enough time on. There's a lot of sameness in industries. I've always called it a regression to the mean. You look around your industry and you try to do what everybody else does. The problem is that means you're going to become average. And if you want to stand out in an industry and you want to make your first million as quick as you can, then that means you're going to have to do things differently than everybody else in your industry. So it's, and then I would say the fourth thing I would recommend to someone is you're going to have to market your business. And this is something that, falls on deaf ears for a lot of entrepreneurs, because, they're a technologist and they do this, or they're a physician and they help patients or whatever, but they don't necessarily focus their attention on how do you market the business. As I've often said, you can be the greatest brain surgeon in the world, but if you don't have the ability to tell people that you're that, then how do you get the business, right? And that same philosophy applies no matter what it is that you do out there. If you're, you decide to design a new shoe, who's going to know about it if you don't actually market it? Okay. So that's the fourth thing. You need to spend some time on learning how to market appropriately. And then the last thing, which is critical for any business, especially to sustain yourself in business, is you've got to execute. At the end of the day, you have to do what you said you're going to do consistently. And sometimes that means you've got to follow up, and you've got to provide good customer service, and you've got to provide the product or service that you said you're going to do repeatedly. And there's plenty of people in this world that do not do that, that are inconsistent, that do not have the discipline to execute day in and day out. So I think if you want to get to $1 million in your business, a brand new business, those are the 5 steps you have to do. Yeah, absolutely.
Business finance, sometimes the secret to grow your business. And tell us a little bit more about underserving small business owners, that they need some finance in order to grow or in order to operate. And sometimes they find challenges. They're very small. They're too risky for the compliance of a large institution. Nobody wants to get involved because it could be a high risk. However, sometimes those businesses, they already have the order. They just need to produce the the thing, and they just need some finance for production, and that's the end of it. So tell us a little bit more, Chris, how you end up in this space, and business finance is good for people that need the business to operate, but also other people and other entrepreneurs, they might want to buy a business, and maybe the person has a good track record. Probably you guys can help with that. So tell us a little bit more about what niche are you serving and why you choose this niche.
So I kind of fell into it a little bit. By that, I mean, my mother was an entrepreneur. She was actually a chocolatier, of all things.
Wow.
Yeah, and made it at our house. Probably violated every health code imaginable. At a very early age, I learned how to manufacture, assembly line. I learned how to sell. I learned how to package. I
Wow.
learned customer service, all these types of things.
Very impressive.
Probably starting at about age 7 or so. And so growing up in an entrepreneurial household, I probably didn't have the temperament to work at a large corporation, even though I did that a little bit in my career. After grad school, I worked in the high tech industry or outside of Washington D.C. for about 2 years, and then I was in sales and marketing, and then I got recruited away by a headhunter to join GE Capital. And the reason I joined them was it was an opportunity for me to put to work what my graduate degree was in, which was business, public policy, et cetera, and also marry that with finance to finance entrepreneurs. And to me, it sounded like a great opportunity. At the time, GE Capital was the largest non-bank lender in the world. It was the largest non-bank lender to American small businesses. And it was back in the Jack Welch days. Got to know Jack, got to go to the special training place, Crotonville, which existed at the time. It was a great managerial learning experience for me. I was there for a while, and then got recruited away by the second largest non-bank lender at the time, who then GE promptly bought. And my sort of tongue-in-cheek comment was always they could have just got away with done away with my compensation cap and just paid me a little bit more, and they didn't have to spend billions of dollars to buy Heller to get me back. But
wow, that's amazing.
Yeah. From there, I was a management consultant for a few years, and then I launched out on my own and basically decided in the aftermath of 9/11 that I wanted to control my destiny, wanted to be my own boss, did not want to necessarily work in corporate America, and really wanted to get more in the trenches with the audience that I like to finance, which is fellow entrepreneurs. And so I launched my first company, which was called Mercantile Capital Corporation, in fall of 2002. Promptly sold it in the fall of 2010, and to a bank, and then stuck around for almost 4 years.
What was the main purpose of this company from 22 to 2010? What we're doing? Lending? What specific type of lending?
We were doing small business lending, utilizing one of the Small Business Administration loan programs, the SBA loan programs, called the SBA 504, which is for owner-occupied or operated commercial real estate or heavy equipment. And that's it. That's what we were doing.
Yeah.
That was it. A very specific niche. Sometimes you enhance your ability to get business by turning down the business that isn't right in so we did that a lot. When I sold it to the bank, I stuck around for almost 4 years. And then at the end of that period, I tried to buy it back.
You tried to buy it back? Wow.
And unfortunately, the bank was selling themselves to another larger bank, and they didn't want to splinter off a piece. And so I left, and I started over 6 months later with my last company, which was called Fountainhead, which was another small business lending company, nationwide. Both of these were nationwide lending companies. And this time I decided to add another SBA loan product, which is called the 7A, which is the marquee loan product of the SBA. And that one, we finance not just owner-occupied operated commercial real estate or equipment. We also do business acquisitions. We finance working capital. We finance partner buyouts,
Wow.
business debt refinancing, debt consolidation, all sorts of different things for other businesses. And that one went, by the way, Mercantile made it on the Inc. 500 list of America's fastest growing companies 3 years in a row.
Wow.
Fountain was on 4 years in a row. Fountainhead near the right before the pandemic, at the beginning of the pandemic, we pivoted the business away from making SBA 7A and 504 loans to making Paycheck Protection Program loans, PPP loans, and we became the sixth most active PPP lender in the country. We made
Chris, can you expand in this PPP what actually means?
It was called the Paycheck Protection Program.
Uh-huh.
This was the United States attempt to try to prop up small businesses during the pandemic, because in the States, small businesses make up about 47% of the economy, frankly.
Wow.
They represent 90-some% of all new job creations in America. So it's a very vital component of the US economy.
Mm-hmm.
And so this was a program when, things were shut down. You couldn't leave your house in a lot of places. Businesses, they weren't conducting business. There wasn't demand for their products or services during that period of time. So the US was trying to induce business owners to keep their staff rather than laying everyone off. And one way to do that were these loans that were ultimately became effectively grants because they were forgiven at some point if you actually use the proceeds as they were expected. So it was a massive program. It was actually the law that was put in place was the largest law ever in the United States up to that point. It was also done in 9 days. I was very, very involved in helping create the program, and then obviously later working with the White House, Treasury, the Federal Reserve, SBA, Congress, all sorts of things to try and promulgate all the regs from this program. But we ended up making about 300,000 of these loans in about a 6-month period of time. If you break it out over 2020 and 2021, for just under $5 billion. And so it's a whole nother story there. There was a lot going on there. And then ultimately, as we came out of the pandemic, we pivoted back to our core business. Things were still growing tremendously. But I had two partners who decided to take their proceeds, their winnings, so to speak, of what we had done during the pandemic, and they didn't want to continue to support the business. And so when we had a capital call, I got outvoted. And so we had no option other than to wind down the business, which is it's a cautionary tale about when you take on partners. You got to make sure that your partners are simpatico with you, that they align with your philosophies and how you want to operate the business. So I left, and a good friend of mine called me up and said, that's terrible what happened, but you guys are one of the best in the business, if not the best. Do you think you could bring your team over here? And oh, by the way, I'd like you to lead our group. And that was Community Bankshares. And we moved about 95% of my team over. I became the president and CEO of the bank holding company, which is that's the umbrella organization that owns the three divisions that you mentioned, which is Community Bank and Trust, which is a nationwide small business lender. We're a preferred lending partner of the SBA. We also have Phoenix Lender Services, which is my shirt. That is, we're a lender service provider for other lenders, meaning we do origination, underwriting, closing, secondary market sales, servicing for other lenders. We're basically their back office. They pay us to do that. And then we have a third division, which is Thomas Financial Group, that is the largest USDA business loan packager in the country. And so you put all that together, it's a bit of a powerhouse in our space. Again, we stay in our niche. I follow my philosophy that I said earlier. We're not trying to be all things to all people. We want to do what we do and be the best at it, and probably have kind of a narrow approach to how we do things, and just stay in our lane and be the best at what we do. So that's what we do. That's a really quick summary of how we got here.
Wow, very impressive, Chris. Um, Partnerships and growing the business. Sometimes when especially in the tech space, when another space, when you just started at the beginning and nobody
Mhm.
knows you and you start in a company, well, maybe it could be a good idea to put three, four people, five people, so you have someone to talk and you can listen to ideas and everything. Maybe
Sure.
at the beginning, as a starting up, could be a good idea to have the partnerships. But on the other hand, when you're really clear what you want and how you want it, um, sometimes it's better to stay to be the captain of your own boat. And yeah, if you can bring partners, but you can have certain type of control. For us, we have a lot of business partners that we do things kind of together, but we send them maybe in have the main control, right? So tell us your view in partnerships, the good, the bad, and the ugly.
Well, I mean, I've had good partners, I've had bad partners.
Welcome to the
I've
club.
had yeah, I've had partners that's just neutral. That's
Mm-hmm.
I would probably put them in the good partner category. If it's
Yeah, they're
not,
neutral. They're also good. Yeah, that's kind of
yeah,
supporting you.
no,
They
that's right.
don't
No
speaking
drama.
against, so it's
That's right.
good.
That's right. Um, I think you've got to be really clear about what you want in business. Um, your values, your philosophies, and you would hope that you would line up with someone as a partner, right? But it's kind of like when you hire someone, right? You look at a resume, maybe you look at a cover letter, and you say, great, let's interview that person for this position. And they interview really well and they looked really good on paper, but you don't really know how it's going to play out until they're in the position, right? And then I'm sure you've had the same experience I have. Now, a week later, a month later, you go, this is not the same person that I interviewed. This is not the same person. They looked great on paper, but now that they're in the role, they're just not cutting it, right? So I think the same thing applies with partnerships. You have all the best intentions up front, and maybe you're in alignment initially, but people are complicated. Things change. People evolve, and I had a great partner a couple companies ago. I think we only said a crossword to each other twice in like 10 years.
Wow.
Uh, but at the end, it completely fell apart. So I've also had partnerships where, it's like, it's fireworks all the time. And, there's yelling and shouting. But once it's all out of someone's system, you got it out and you just shake it off and you move forward. And, you know where people stand and, what their hot buttons are or not. And, that can be positive. But there's probably nothing worse than a bad partnership, I guess, is one thing I would say, because that can kind of suck the soul out of you, the life out of you,
Mhm.
and take you down from a motivation standpoint.
Mhm.
So I've had some of those too. My last company,
Mhm.
that unfortunately, it when it should have been going the best of all time,
It
when
was sounding amazing. It was
when you
going.
deliver, yeah, when you deliver quadruple digit returns to your partners, and then
Mm.
suddenly they say, you know what, I'm going to take my ball and go home. That's a little disheartening.
So
So
they wanted to sell it, yeah.
no, they
Well,
just wanted to they wanted
to
to
en-
take all their
to enjoy
their
the
their
life,
things and
yeah.
just shut
Well,
it down. And
uh,
unfortunately for me, as a
I think
business
that
owner,
I think that not as passionate as you about
no,
this.
definitely not. They weren't as passionate, and they weren't operators. I'm an operator, right? So as a business owner, I'm in the trenches with my people. I am
Hmm.
responsible for my employees,
Absolutely.
and I have an obligation
Hmm.
to
That
continue to
team,
try to
yeah,
run the business, keep the team together. They've got mortgages to pay and ballet lessons
yeah.
and car
And you
payments
go
and all
there,
kinds
you
of
say, let's build this company, let's grow this company, let's do it together. You're telling this all the time, and then all of a sudden, when you cash out
right.
and leave everybody in the street, it doesn't
That's right.
sound
Yep.
well. at the end of the day, it's business, but we do have a social responsibility with our team
Mhm.
members and with our employees. You see, sometimes we have employees that we don't even know, but because of that job, they sometimes the only person that brings food for the family
That's right.
in that, and we are also somehow responsible for that extent
Mhm.
as well.
That's
So
right. Well, and it goes to, we got to be, you know, we have to be careful when you pick a partner, particularly if it's a larger partner. If
mhm,
you're getting with a venture capitalist or a hedge fund or a private
mhm.
equity, some of them want to be extraordinarily supportive of their entrepreneurial clients, and see the goal and see the mission, the vision. Others, it's just purely transactional.
They
And
just want to see the
unfortunately,
return, and that's it. Yeah.
that's right. Yeah, and unfortunately, that's what I had this last time. And look, I learned from it.
hmm
It was a good stepping stone. Obviously, I did well. We all did well, but I wanted to keep going because I'm not exactly ready to retire at any time soon.
Mhm.
And
It sounds to me that you
I
will never retire. Yeah, it sounds to me that when we
probably
had this
won't.
conversation in 20
I
years, you're
probably
still
won't.
gonna be,
No,
Harry, I'm doing this. You won't believe, amazing, helping a lot of people.
that's right. That's right.
So it sounds, because let's be honest, you don't have to do this. You do
No,
it.
I don't
You
actually.
don't really have to do it. You definitely do it because you're passionate about it. Because you don't have to. You go and work because you want, not because you have it. You have the luxury to have a successful career, an exit, and
Yep.
being
Yeah,
a being a finance guy. I don't think that will money that you don't look that you have money problem in your life. You know what I mean? So with that background, so you're doing this truly because you really love it, and you want to help people. So I applaud you for that.
Well, thank you.
um
My wife wanted me to retire.
oh
A couple.
yes.
Yeah, and I said, What am I
Yeah,
going to do?
yeah,
I'll just go
yeah,
mad if I'm on the golf
yeah,
course too much or something. I did
yeah.
pick up a little hobbies, but no, I do this because I enjoy it, and I like the competitive aspect of it, the
Mhm.
creativity of it. I like the camaraderie of it with my team. I like to build things,
Yeah,
and
at the beginning when I started my business, I want to make the first million, I want to make the first million, I want to make the first million. After then, that was all in my head, I want to make the first million. Wow. And a lot of excitement. And when actually happened, that I saw the first million, I didn't even notice. It was even the
yeah,
accountant who told me. And I was thinking in my head, oh, I'm gonna go on holiday, this and this. Well, after 3 weeks on the beach, I was so bored.
right.
And I'm like, what I'm doing here?
Right.
I'm I'm bored here. What's the whole point of doing the whole thing? Let me get back to it, and keep doing what I'm doing. So sometimes you have in your head, wow, you
Yep.
see, I'm gonna achieve this, so I quit working and I'm gonna be all my life by the beach. It's not. This is not actually how it happens. When it happens, probably you have employees, people that you have to take care. Yeah, and for me, it's even better. In my property business, my first property business, we managed to save 5 million. My manager one day arrived to the office and she told me, "Harry, go home. We don't need you anymore." I'm like, "What?" I said, "No, no, go home. We can run this business and grow this business without you." In fact,
Right.
the biggest problem in this business is you. That have nothing to do. You come here, you talk to us, you don't let us work. So I'm like, guys, you don't even need paper the photocopy. No, we can get paper the photocopy. Go travel the world if you want. Don't come here. They were so good. My employee, they were better than me at everything. Better than me in sales. Better than me and everything. They literally send me home. The first day I realized, I'm thinking, did I make obsolete in my own company? This is a good thing. But after I realized that I turned employees into leaders just kind of by accident, and it was amazing. I was happy, more happy for them that they have this sense of ownership. Um, the question, coming to business finance, right? Um, uh, we talk about 0 to 1, how to make the first million, right? However, if somebody have experience running the business, because the 0 to 1 is intense, yeah, and if you don't and risky, and if you want proof of that, you can listen to the 500 millionaires that we interview in this podcast, how they went 0 to 1, and however, buying and operating business, sometimes for somebody that has been an entrepreneur or have some idea, can be a very good way, because you can become a business operator, you can grow this business. But even if it doesn't grow, there are a lot of business out there where, there are good business, good cash flow business. The owners doesn't want to operate anymore. They want to pass it to the children. The children doesn't want it. And probably this business have a large chance to close. So when you guys help entrepreneurs to purchase those businesses, uh, do you look at the potential for the entrepreneur that actually have the skill to grow that business? Because of course it's in your own interest that the loans get paid back in terms of finance, or or you guys are looking more as a transaction. Okay, I'm gonna lend this money for business finance. We're gonna charge this commission, and that's the end of it. I don't care. So how is your approach and the support, especially for the small business? They're very sometimes intense when the people that they're buying, if they don't have experience, to be a risk there. How you mitigate your risk in order to assess this loan to small business?
Well, so about 60% of the fundings that we do right now are for business acquisitions. So
wow.
we do a lot. And we go up to $5 million. That's our current cap on acquisition financing. And we do it all across America. It's a couple things. You oftentimes in a business acquisition transaction, you may not have collateral or a lot of collateral. And oftentimes that's what goes with a loan, of course, an ordinary conventional loan that you would get from a bank, let's say. The problem with business acquisition transactions is it's very difficult to get an ordinary conventional bank to actually finance them. So it leads, in my experience, you basically have three ways that you would finance a business acquisition. You would pay cash, which is obviously not always an optimal situation. And even if you had the cash, it's probably not the best stewardship of that money, right? You could do seller financing, which is certainly an option. The downside of seller financing often is that if you don't have an independent party that's actually involved in the transaction, like a lender, for instance, then that seller will oftentimes have a sales price that's higher than what it should be, for instance.
The value of the business, yeah.
Right. The value is oftentimes inflated. The seller is not a financier, so oftentimes the seller is probably going to have a very short repayment term, probably will have an above market interest rate. So, and frankly, let's be honest, they're going to be waiting in the wings for you to fail so they can grab the business back, and they will have taken a rather nice down payment from you, which also is typically above market as well. So seller financing is kind of, your last approach. The best approach in the United States oftentimes is getting an SBA business acquisition loan. You have a 10-year repayment term. You typically put 10% down of the purchase price. You are dealing with an independent party, like a lender like us, who actually is going out and hiring a business valuation firm that actually says, just like an appraisal in a house, for instance, that you might know, same type of thing. They're going to tell you, is this priced correctly? Is it priced too high? Are you getting a great deal because it's priced at low? Whatever. You have that sort of
an independent that would be that's independent.
That's right. You have, competitive interest rate. It's just, you put it all together, and that's why SBA is really the preferred business acquisition financing tool here in the States. So that's, I do
Chris, but
I
hear that with this you have to prove also that you have a certain amount of assets. Is that correct, or only with the down payment would be enough?
No, I mean, we, as a lender, it's lending is everybody wants to make lending a science. Lending is a little bit of art, a little bit of science. Okay. And so there's every deal is unique. And,
Mm-hmm.
would I prefer to have someone have post-closing working capital as a buffer, as a risk mitigant? Of course I would. Have I made exceptions sometimes? Yes, I have,
Mm-hmm.
because other attributes have been very positive, and we have
And
to
if the
try to look at.
business is looking good, if the business is
Well,
looking
yeah,
good in terms of cash flow, is
sure.
healthy,
Sure. The business has got to, the business, we want to see it cash flow. So we want to make sure that you've got adequate debt service coverage ratio. That's banker speak for cash flow. Okay. So the business is throwing off enough cash available to service the debt of the transaction, the business acquisition loan itself, plus any other business debts on an annualized basis. I want to look at repayment history of the borrower themselves, right? If someone's got, an 800 FICO score, which perfect, I believe, is 850s. That means they take their debt seriously and they repay them, and they're not charging them off for being late. If someone's got a 550 FICO score, that's very concerning, and there's probably reasons for that, and we want to dive into that and try to figure
Mm.
out why the credit score is as low as it is, and it may not be a risk we want to take. We want to understand. You brought it up earlier when you were asking the question. We want to understand what kind of experience the prospective borrower has in that industry. That doesn't mean we would exclude them if they didn't have exact industry experience. But more importantly, what we're looking for is we're looking for leadership experience. We're looking for, have they ever run a profit and loss? Do they actually know how to manage a business? Have they operated a business before? That's really important. We do like to see if there's some collateral. It's not a deal killer, especially with SBA loans. It's not a reason to decline an SBA loan for lack of collateral. We do have a government guarantee on our SBA business acquisition loans, and that helps mitigate some of the risk, which means we're willing to step out and take more of a chance on a prospective borrower than an ordinary conventional bank would do just doing a conventional loan. And that's why they tend to shy away from doing business acquisition loans. So it's all of those things. And I'm literally just summarizing here, Harry, because there's a lot of other things
Mm-hmm.
that go into to do this. But those are some of the considerations we have when we're evaluating a prospective borrower. Yeah.
So, Chris, now the question that everybody's waiting: where can we find these amazing businesses for sale? So, if our audience can find them, they can even come to you to help them with the finance. So, where can
Yep.
we find? The other day, somebody was sharing with me that Harry, we are doing some loans to buy property,
Hmm.
and we if you have 25%, I think that was what they told me. It's not gonna be any more credit checks because the houses that we are giving you, um, we are make sure that they are paying the mortgage and also have an extra over the mortgage payment. So it's no risk for us. It's not such a high risk for us. If you buy this property, we don't need to check any more credit check on the whatever credit score. Only with the 25% down payment will work. However, you cannot buy any house. You need to buy certain house that we're gonna give you one list because this is a house that the lender knows that can produce this cash flow. So sometimes there's some kind of protection somehow that they say, okay, we're gonna lend you the money. We're not gonna do credit check, but hey, don't go crazy and buy whatever you want. Just buy something that buy this. So we are making sure that you can pay the loan like that. Especially, I think this vehicle was from people from abroad that want to invest in United States, right? So that was the criteria. So the question is where people can find those businesses that somehow it's not that I have a protection, but they're business that genuinely are for sale and that have potential. They have a bit of potential for growth, or at least they are just healthy cash flow business versus a business that might be looking good on paper, but again, it could be overpriced. Some risk can be involved. For example, I used to have a restaurant before. I lost 200,000 in a long time ago running restaurant. So restaurant business requires a lot of operation. If an entrepreneur is going to run a restaurant, ideally have to have a lot of some experience running operation, because this is no a dry cleaning business, right? You have some machines there that they wash the clothes, and well, you only have two people that deal with the thing. It's completely different both game one and the other one. So where can we find, Chris, healthy businesses, or any tip that you have for our audience, how what they can find? Because if they find it and everything look good, I'm 100% sure that you know how you're not going to have any problem to provide the finance for this business. So how can they do it?
Well, couple things. Number one, be careful with any businesses that have inventory that goes bad after 2 or 3 days.
Tell me about it.
That would be number one. It's a cautionary tale. Number two, you wouldn't go driving your car into a neighborhood looking to buy a house, just driving around. You could do that, but it's going to take a long time, and you're probably not going to be. It's probably not the best way to do it. You want to use an expert. You want to work with someone who does that for a living.
100%.
I've known countless small business owners who, on the weekends, they've been making their landlord wealthy by owning their real estate, and they'll drive around on the weekends into, business parks looking for property to purchase. And I'm like, why would you do that? Why wouldn't you just call up a commercial real estate broker who does this day in and day out and has the tools and the resources to help you make this a good process?
And find a good deal. And find actually good deal.
Sure, because they have access to that. So to your point about, I think the same thing applies if you're going to buy a business. There are plenty of resources out there. There's, biz by sale. There's business brokers. I'm a big fan of people working with business brokers, because these are professionals that do this for a living. Just like, look, nobody wants to pay the commission to a realtor if they're buying a house, right? It'd be much better to just transact directly with that seller. But the reality is, that's not the way of the world. That you could do that occasionally, but it's you're not going to be able to do it at scale, and you're probably not going to get the best deals. And so the same thing applies if you're going to buy a business. Work with a business broker. There's tons of business brokers out there.
Typically, how much you have to pay to a business broker, Chris, for our audience?
Unfortunately, it's depending on who it is. It can be as much as 10% of the purchase price, but they are sourcing the transaction. They're vetting, the background of the business. They're putting you in touch with lenders like myself who can finance them. They're assembling all the documentation that you would need from the seller.
The big job, yeah.
Yeah, I mean, I think they earn what they're charging. And it's the fastest way to get from point A to point B if you want to do it. Yes, you can go door to door in a business park and ask if the seller's willing to sell his business, but you might be doing that for years before you stumble on somebody who decides, yeah, it's great that you showed up today, and yeah, I'd like to sell you my business. I think the path of least resistance is to hire somebody who does it for a living. And I think, it's going to be a much better experience for you to do that. It is going to cost you, but it's worth doing, I think. And so, the largest business brokerage out there that I'm aware of is Transworld. We've done a lot of work with them over the years.
Wow.
Their annual conference, we're typically their highest level sponsor. Murphy Business is another one. There's VR Business, there's Sunbelt Business, there's First Choice Business Brokers. I mean, there's a ton of different franchise or large operations in the business broker space. But I would recommend you try to work with a professional and somebody who's an expert at what they do.
Because even Chris, if you find the business yourself, still you need to work with the business broker to do all this paperwork anyway.
Sure. And I'm sorry, but sometimes sellers will take advantage of you. You need somewhat of a buffer between you and the seller, and whether it's a broker or your lender. third party, like a business valuation firm, somebody who's going to vet the financials, for instance. I mean, I can't tell you how
exactly, Chris, which is something amazing that I think in your business is like, even if I find a business broker that tell me, Harry, this business is amazing, whatever, and I find Chris as to provide the finance, Chris is going to find a third party or whatever to assess the business, to evaluate the business independently from the broker. And maybe Chris can come back and say, Harry, look, find another one. We don't, it's not looking good. And these are some risks that you haven't taken consideration and whatever. And it's a kind of protection, because at the end of the day, if you're buying a business, you wanted to make it work, yeah, and you want to be able to pay the loan and everything. You don't want to get stuck in this process, and so yeah, I think that you have a great product, fantastic.
Thank you.
And you having a lot of fun, and you enjoy what you do, being spending a lot of time with the entrepreneur. Welcome to my world, yeah. Nobody else want to talk to me anyway. I had to invent this podcast to actually keep talking among ourselves, our entrepreneurs, because we are very little, and nobody else want to talk to us out there. So, Chris, if people are in love with the conversation and they want to they find a good business, they want you to provide the finance and things like that, how people can find you, how this process works? Can you share with us, please?
Sure. You can go to communitybankshares.com. You could go to phoenixlenderservices.com. You can Google me or throw me into AI, and there's all bunches, there's almost 30 years worth of articles I've written and interviews I've done, and TV and radio and podcasts and everything else. You can learn about me there. If you want to email me, it's churn, CHURN, at communitybankshares.com. And any of those ways, you can follow me on social media. I don't post as much as I used to, but I still do a fair amount on LinkedIn, but some of the other platforms I don't do as much as I used to. So yeah, but those are the ways to get a hold of me.
Thank you so much, Chris. And for all of you following this broadcast, see you in our next episode of Unstoppable, how brave entrepreneurs like Chris break that wall and achieve the first million. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.